learners. My name is Mr. Adesomi, and today I will be introducing you to bookkeeping. Bookkeeping. Now, if you remember that bookkeeping is one of the components in business studies. We have four components of business studies, and in some cases, five. From bookkeeping down to commerce, and then down to office practice, down to keyboarding, and then commerce. So, but for now, we are more concerned about bookkeeping. So, as we go on, I want you to go along with me. Introduction to bookkeeping for junior secondary school. So, the question is this: when we say bookkeeping, what comes to your mind? Is all about recording. As you can see from the picture, a bookkeeper taking accounts, recording, and calculating. So bookkeeping is all about recording of transactions into a ledger or a journal, as the case may be. So bookkeepers are needed in every organization. So far, that organization deals with money, deals in buying and selling, then a bookkeeper is needed. And such organization have to be involved in the act of bookkeeping. So, what is bookkeeping? It is defined as the act of recording business transactions in an orderly manner. So look at the word I underlined there, transactions. So it's an act which you must be very good at of recording every business transaction in an orderly manner. So when we say orderly manner, it has to be according to date, in a chronological order, recording of all business transactions. So I believe you'll be asking me, what is transaction? So let's quickly see the meaning of transaction. So also take note of this, is like recording the money given to you as a child. You can see there, it said my money logbook. So as your uncle gives you money, you record it down. As your aunt gives you money, you record it down. So what are you engaging in? You are engaging in the act of bookkeeping. So, and when you take out of your piggy bank and spend, you also record it down as expenses. So what are you doing? You are recording down. So what is transaction? Quickly. A transaction occurs when a business or a person buys or sells goods or services. So we involve in transactions every day. When you go to a nearby market to buy an item, there's an exchange taking place. So you want a product or you need a service, and you are ready to pay for such services, or you are ready to pay for such product. Now, when you exchange your money for such product or services, it is called transaction. So it occurs when a business or a person buys or sells goods or services. So take note, as I've said, from the picture, is all about buying and selling. So you can see the young girl there buying fruit. Now the seller, who is the one selling the fruit, has packed the fruit in a paper bag, and the girl in question is ready to exchange her money for the what is taking place here now is what we call transaction. So now I'll be taking you to types of transaction, but take note, because money is used here, it is called cash transaction. Because money is used here, it is called cash transaction. So we have two types of transaction. We have cash and credit transaction. Cash and credit transaction. Cash and credit transaction. So when we talk about cash transaction, if cash paid immediately during buying and selling, then such transaction is tagged as cash transaction. I will say that again. If cash is paid immediately during buying and selling, then it is tagged as cash transaction because money is used as a medium of exchange. Money is used to buy such goods and services, just like the picture I showed you earlier. Now, the second is credit transaction. This payment is to be made later. So when you buy an item and you promise to pay later, when you go to a nearby shop to say, please give me this item, my parents will be coming to pay you back, or you promise to pay at the end of the month without you giving the seller money immediately, you are involved in credit transaction. So those are the two types of transaction we have, at least for your level. We have cash transaction, which involve using money during trade. Why credit transaction means you not use money, you are planning to pay later or planning to transfer the money into the account of the seller. Okay, so look at that. That's a typical marketplace where a woman is buying some vegetables from a seller. So what is taking place there is cash transaction. You can see cash is being exchanged for tomato there. So that's an example of cash transaction. But when money is not involved, it is called credit transaction. So I believe you are following me. Now, importance of bookkeeping. We can't overemphasize the importance of bookkeeping. Now, bookkeeping is very important in an organization. Every organization have a bookkeeper. A bookkeeper. Now, these are the um, reasons why they are important. Number one, it enables a business to have a permanent record of all its activities. So, keeping record of how much comes into the organization and how much goes out of the organization helps the organization to have a better understanding of how money is leaving and coming in. So, if from the book or from the recorded made, then the organization will know if they are making profit or loss. So, if more money is coming in into the organization and less money is going out, then you believe me that they're making profit. But if more money is leaving the organization and less money is coming in, loss. So a good book keeper takes account of all money that is coming into the organization. So it enables the organization to have a permanent record of every of the activities, and it is done every month, every year. So far the organization is in existence, they must keep the book of the account tidy. Two, it assists the business to monitor its expenses. Yes, because sometimes business go into a lot of expenses, a lot, in millions, in billions. So now, to know if they are overspending, the only way to know is to go back to the books of accounts and check. So that they will monitor, oh, we've gotten this, did this year, we did this the other year, so we don't need to do this now. So it helps them to monitor their expenses monthly and yearly. The third one on the list, it gives a business an idea of its debtors and creditors. It gives a business an idea of its debtors and creditors. So when we talk about debtors, we're talking about the people that are owing you. The people that are owing you. Those are your debtors. People that are owing you, those are your debtors. So it gives you a good list of people that are owing you money outside. So you know, Mr. Stephen is still owing you some amount of money. Oh, Mr. Jonathan is still owing you some amount of money. So it helps you to have a good account of people that are owing you money. So you know how much money you have to collect from them. You know how much money that belongs to the business are still outside. Now, it also helps you to have an idea of your creditors. Creditors are the people you are owing, your suppliers, those people that supply you raw materials that are used for production of goods and services. Those people that supply you fuel to run your generator. So your suppliers, sometimes you might be owing them. You might involve in what we call trade credit. Trade credit is a form of credit where you collect some items on credit, promising that after you have made sales, you will pay the money back. So this is common in the business world. Now, your creditors, you must have a list of those people that you, as a businessman, are owing. As you have the list of those who are owing you, meaning your debtors, you must have the list of those people you are owing, your creditors. So it gives you an idea of how the business is doing and how much money is outside and how much money you are to pay. Number 4, it helps the business to calculate its tax. It helps the business to calculate its tax. So the question is this: what is tax? What is tax? So tax is a compulsory levy. Tax is a compulsory levy that every citizen of a country must pay. Every citizen of a country must pay. So far you're of age, meaning an adult, and you are working, you must pay tax. Is part of our civic responsibility to pay tax. So every business organization must pay tax. Now, you pay tax from the profit you have made. Government will come in and check your books of account to see how much you have made. So how do you calculate your profit? Meaning, when you minus how much money comes into the organization from how much money has gone out of the organization, meaning when you calculate your income minus expenses. Remember, you have a book for income, you have a book for your expenses. So when you do your plus and minus, if your income is more than your expenses, then you are making profit. And that is what every business wants. They want to make profit. So once your income is more than your expenses, you are making profit. But if it is the other way around, meaning if your expenses, your expenditures are more than your income, then you are making loss. That business in no time will close down. That business in no time will close shop. So every business wants to make profit. So, and you can only make profit if your income is more than your expenditure. So once you've calculated that and you've gotten your profit, now that's what we call profit tax. Every corporate organization pay profit tax. So the government will come in and collect this compulsory levy as tax. Different countries have their different calculation of percentage you have to pay from that profit as tax. Now this money that is collected as tax is used to provide social amenities like roads, good road security for the business in those areas to survive and keep on doing business. Number 5, it helps the manager to know the financial position of the business. Yes. So a good manager must study the book of account to know if the business is truly progressing or regressing. So the managers, financial managers, the general manager sometimes will call a meeting to check the books of accounts to see how the business is doing. Is the profit increasing or is the profit decreasing? Is more money coming in or is more money going out? This will help them to know if the business is growing or not. Number 6, good bookkeeping practice enables one to ascertain the profit or loss made during a trade period. So I'll repeat that again. A good bookkeeping practice enables one to ascertain the profit or loss made during a trading period. So it helps you to know if you are making profit or you are making loss after a trading period of either a month or a year. So you calculate how much comes into the organization and how much you have spent in running the organization. It's called running cost. in buying fuel, in paying salaries of your workers, in paying rent of the building you are in, if it's rented, in buying raw materials. So those are expenses. So as I've said earlier, you do the calculation to know if you are making profit or loss. Okay, so let's move on to the quality of a good bookkeeper. Quality of a bookkeeper. Number one, he or she must be honest by nature to earn the trust of everyone. Now, remember that a bookkeeper is dealing with money, and it is believed that money is powerful. Now, if you are recording millions or billions in a company's account every now and then, and you are seeing the money, and in your own private account you have less than 1,000 or thousands. Now, if you are not honest by nature, you might go into stealing and changing the books of account just to embezzle money. You might be corrupt. So, and that is why one of the qualities of a good bookkeeper is that he or she must be honest by nature. Now, if you show that quality of honesty, then you will earn the respect of your boss. You will earn the of the managers in the company, because they know that you are a trustworthy person, and they will be able to commit more responsibilities into your hands, because the bookkeeper is a lifeline of an organization. He must not be fraudulent in his activity, because if he or she is fraudulent, it can that quality can kill the business. So he must be honest by honestly recording the actual money that comes into the organization and how money is leaving. It must not involve in any shady deal. It must be transparent enough, and accountable with evidence for all transactions made in the organization. Number two, he or she must be neat and orderly in presenting records. Very, very important. And that is why in bookkeeping, some of the ethics is that you don't shade. You don't write 5,000 and you not change your 5 to 8. No, it is wrong. You don't shade. Your record must be neat and orderly. And that is why you see one of the qualities of a bookkeeper is orderliness. Even in recording, you underline properly your ledger, you record well, and if there's any mistake, then you do the needful. And what's the needful? If you're even correcting that, you sign to show that you are aware of these the mistake that you have made. 3, he or she must be organized and must pay attention to every little detail when recording. That is why you don't need to be distracted. A good bookkeeper must be organized and pay attention to every naira and every kobo, every dollar and every cent that enter into the organization. Pay attention to every small detail when you are recording. Very important. He or she must be confidential, preventing outsiders from knowing the private issue of the business. That's one quality. A bookkeeper must keep the secret of the business secret. We call it confidentiality, because he's in charge of the money that comes into the organization and that goes out of the organization. Whatever has to do with the business should remain in the business. He must not go out and begin to tell his family members or begin to tell his friends how much they've made in the business. Those information can be used to set the business up. Those information can be used to set the business up. So every secret, financial transaction, details of customers, how much money comes into the organization, and how much money leaves the organization must be kept secret by the bookkeeper. Remember, he has a good knowledge of how the business is doing. Has a good understanding of how the business is doing. So now I want you to try this assignment. It's an assignment. Try it yourself and try to get the differences between First, define transaction in your own way. Define transaction in your own way. Now, after you have done that, try to find the difference between a bookkeeper and an accountant, meaning bookkeeping and accountancy. Try to find the difference between the two. 3. Is it true to say that bookkeeping is a part of accountancy? Now, if you have gotten the difference between the two, so yes, you should be able to answer number 3 question and then give reasons for your answer. Give reasons for your answer. Now, in our next class, common bookkeeping practice. Common bookkeeping practice. I hope you enjoy the class. You can drop your questions on the platform now for me to be able to assess. Thank you for watching.